So coming to the theme of democratization, let's talk about your passion project. And this is something that, I also want to talk about. But it's just that I wanted to, have ourselves some context and a base of, our discussion before we moved into, something that even I want to know so much about. Um, Mr. Ashi, tell me something about what have you seen in the wealth management industry? And I'm not saying from the perspective of revolutionizing it, but what are the, things that have gone wrong that you have seen that has led you to feel an aha moment that, what, maybe I could do something different. Maybe I could, use my core value of fiduciary responsibility to bring in something different. So essentially wanted to know what were the things that you have seen, gone wrong with people, or some incidents, or some, I don't know, it could be anything that you feel like sharing. We would want to know that you felt that you could bring in something new.
So, yeah, thanks a lot for asking that question because this is something very, very close to my heart. I don't think there's an aha movement. It's a kind of realization that has just grown over a period of time, and this is not something that just I feel. I know every fund manager feels this.
Hmm.
As a fund manager, there's a particular fund that I'm managing. I ultimately want the investors who are investing in my fund to actually make returns.
Hmm.
Now, in order for investors to come in and have a good experience investing in our fund, uh, uh, you actually need two things. One, you need the investor to understand what it is that they're investing in. If you invest in a fund without having understood what that fund is about, very often when things may not go right, you may not have the ability to actually hold on, right? Or you've come in with a different expectation, the fund does something else, and you actually exit too early, and they all kinds of. So an investor needs to understand what they're investing in. The second thing is that while we all say you shouldn't try to time the markets, when it is important that you're getting into the right fund at the right time.
Hmm.
There's a right time to invest in digital stocks. There is a right time to invest in pharma. There's a right time to invest in large caps. There's a right time to invest in small caps. The simple reality is, in my kind of 2.5 decades of managing funds,
Hmm.
uh, the amount of times I've actually interacted with an investor who's invested in a fund, right? And very often investors are investing in our funds without talking to the fund management team. They're talking to the private bankers, the wealth management firms, etc., who've come into the fund with an altogether wrong understanding of what that fund is. And very often the fund doesn't make sense for that investor in the context of what they want. So, for example, through ICICI, I used to run a dividend yield portfolio.
Hmm.
This was considered to be a low risk, low return portfolio.
Hmm.
However, because at the time when we had launched this fund, a lot of dividend yields were actually available in the PSU space, in your oil and gas refining companies, in your PSU banks, other such plays. Uh, and this was back in 2003, just before the kind of as in before a lot of new regulations came in. The SARFAESI Act had come in. There was oil and gas deregulation that actually drove a lot of value creation in these companies.
Right.
Because of that, this fund had actually done exceedingly well. And a lot of investors came in expecting it to be an aggressive high risk fund. Look, absolutely contrary to what the fund is trying to do.
Hmm. Hmm.
In Kotak, we had a 5-year lock in fund, quasi private equity style. Someone had gone and sold, and this is Kotak was an international fund. Someone had sold this fund to a 92-year-old gentleman. I am
Hmm.
aware of a multi billionaire without any heirs to the throne, who's actually
Hmm.
been sold a 5 crore life insurance product.
Insane.
Absolutely no kind of relevance, right?
Hmm. And
Now
all that is
that is the
because of
first
why their
problem. The
commissions were attached to it. All that because the
so
commissions are
I'll, so I'll just
attached.
so
Self-interest
so
attached.
yeah. It's not just commission. So I'll just get to that, but let me just cover
Sure.
the second big
Sure.
problem.
Please go
So
ahead.
one
Yeah.
is
Yeah.
getting into the fund at the wrong time.
Right.
Getting into the wrong fund with the wrong expectation. Secondly, is you understand the fund, but you just got into it at the wrong time. What
Hmm.
tends to happen is that investors chase trailing returns.
Hmm.
So kind So as I was indicating, very often, and we see this in small caps especially, you get money after a theme has run.
Right.
The perfect time to invest in small caps would have been in 2014. The bulk of the
Hmm.
investments happened in 2017, 2018, the absolute wrong time.
Hmm.
Now, this is something which has always personally impacted me, and I know it personally impacts all fund managers.
Hmm.
Uh, because you get the bulk of your money at the wrong time, and you'd have funds where the fund may have delivered a 25% long-term annualized return or 20% long-term annualized return. But if you
Right.
actually see the average return for the investors, it may be low single digits because it's all coming in at the wrong time. And this really kind of hurts as a fund manager that if you're not being able to ultimately deliver returns to your end investor, right? One is your NAV and how the fund is performed, but you ultimately want your investors to make money.
Right.
Now, why does this happen, right? And I think commissions and conflicts are part of the problem. But there is, if you just understand how information is going down to the end investor in
Right.
the investments industry, it is actually a multi-layered form of communication. There's a fund manager who actually knows what fund they're managing, what that fund does. You
Right.
then kind of go to the wealth management industry where there's a central product team that does due diligence into these funds and identifies what funds to kind of onboard onto their platform.
Right.
This is a team of research people. They then decide to onboard certain funds onto their platform, and then you get to the private bankers who are then trained about what this fund does. The private banker is ultimately a salesperson who comes from a non investment background, who is there because they have selling and client relationship skills, aren't there because of their great investment skills.
Right.
They are very often just trained on how to sell a fund without really understanding the nuances of how that fund operates.
Hmm.
And the end investor is ultimately dependent on this private banker who himself is not an investment professional. And the two of them are sitting and trying to take a decision on where to allocate money.
Hmm.
Now, by the time information and insights is reaching the end investor, you've gone through Chinese whispers of four different layers of communication. There
Hmm.
are known conflicts of interest, there are commission biases. You have questions of competence when it comes to slightly more complex funds. The moment you get into something in the unlisted space, if you get into something using derivatives, the vast majority of private bankers themselves don't really understand what's happening in these funds. You have an issue of RM biases, RM dependence, and you have a very important sales agenda.
Hmm.
Uh, the discussion the private banker and the investors having is actually one of sales, where the private banker is trying to sell a fund to the investor. It is
Right.
not, it may be positioned as investment advice, but ultimately, if you look at the reality of the market, you have a bunch of sophisticated salespeople going out and trying to sell funds. It is a lot easier to sell a fund which has been outperforming for the last 3 or 5 years, even if it has kind of there's no longer value in that particular theme.
Hmm.
It is a lot easier selling a flavor of the moment fund. The kind of focus shifts away from what is right towards what can sell. And the entire kind of wealth management ecosystem that I've seen in India is really positioned quite strongly towards what is easier to sell. And
Hmm.
without getting too much into specifics, but time and time again, I've kind of seen kind of financial firms sometimes take decisions driven more by something being easier to sell than being actually right for the investor.
Hmm. Hmm. Hmm.
Now, this happens because information and insights are being driven or delivered by someone with a sales agenda. And I
Hmm.
think that is a fundamental flaw. This multi layered flow of communication is something which, by definition, according to me, is almost designed to fail in
Hmm.
terms of achieving the requirements for the end investor. And which is where, right now, I've complained about this, and me and fellow farm managers, when we speak, we all are aware about this problem. We all discuss it in great depth. I think finally, about 5 years ago, I kind of said that, enough time complaining. It's
Hmm.
time to start sitting and trying to, as compared to just complaining about a problem, try becoming a solution to the problem.
Right.
And which is where really IME Capital was created.
Hmm.
The idea behind IME Capital is actually setting up the first wealth management firm in India with a very, very distinct positioning of being a research first wealth management firm.
Hmm.
Our entire first 2.5 years was spent on just kind of becoming thought leaders in the space in terms of really getting the research rigor that I'm aware of that exists in institutional asset management companies, and using that same rigor that I as a fund manager used to evaluate sectors and kind of companies towards evaluating funds.
So,
And on
sorry, here I want to, push a bit things on, deep dive a bit. When we talk about, you said research, how are we researching and what is the differentiating factor in our research?
So I think there are a couple. So if you ask me, the one big competitive advantage we have at IME Capital
Exactly.
is that uh, so the research team is actually headed by me. I'm a
Right.
fund manager evaluating other fund managers.
Right.
There are a lot of nuances of fund management that I can tell you the central product teams of the largest wealth management firms in the country don't necessarily appreciate. If you look at the central research team of any wealth management firm, you will normally find this comprising kind of people who come from a products background, who have never actually managed money themselves. I can tell you that a smart fund manager who is good at communicating can kind of communicate whatever he wants to some of these teams, and they really, because they've not worked as part in that role, it's not as easy for them to really understand what's real versus what's not. There's another intrinsic advantage that fund management is a very, very small community. There are probably some 200, 250 senior fund managers in the industry, especially senior fund managers, probably even less.
Hmm.
The vast majority of the senior fund managers have all entered the industry 20, 30 years back.
Correct.
All of us were descending on the same broker conferences, sitting in the same kind of company meetings. There are these small group meetings that happens with corporates. So a lot of these are kind of immediate peers. Our ability to sit and understand what a particular fund is doing versus the other, right? That is something which is, I think, a clear competitive advantage. Um, Now, that is effectively that I think is something that we have that most other kind of firms would not. Now, when it comes to analyzing the fund, there is a very clear methodology that we have around how do you really evaluate a fund, right? And how do you identify what fund, the five large cap funds or five flexi cap funds, how do you identify one being better than the other? As a
Right.
fund manager, I understand the ecosystem that allows one fund, the same fund manager in one organization versus another type of an organization would actually perform quite differently. There
Hmm.
are certain enabling ecosystems, there's certain elements that are required for longer term success.
Can
And
you
we
tell
really
me?
understand the nuances of this.
So in within these nuances, maybe let's take a case study and help me understand how would you, let's say I have a corpus of 3 crores and I came to you, right? How would you place me? What would be the process that I would go through with you? And which is different than, how an institution or someone else would be seeing, and how would really would you help me evaluate, or you would evaluate for that matter, differently than another fund manager. So what is that evaluation process with the, corpus of that investor cup when it comes to you?
Okay, Sanjot, before I get to that, let me just explain
Sure,
one key thing before I get to that.
sure,
Right. So
please.
the first differentiator at AMI Capital would be our depth of expertise with this very clear
Course.
research first positioning. There is no value having great expertise at some central team level if
Right,
that expertise is not available to the end investor, right?
right.
And that I think is the biggest disruption we have caused, and that's the biggest disruption at AMI Capital, which is the
Hmm.
use of technology, where we literally open out our central research database into funds. How we
Mm-hmm.
have sat, we've sat and we've rated and ranked all
Right.
the mutual funds, over 250 PMS firms, some 300, 400 PMS schemes. We've looked at AIFs. those central insights of our central research team have been documented on a technology platform called the IME RMS.
So is that your tech stack?
And that is our tech stack, right?
Okay.
And that is something which our investors get direct access to. When
Okay.
we document our insights, we are very particular about documenting insights in a manner which
Okay.
is easy for an end investor to understand.
Hmm.
And investors have direct access to the central research team's
Hmm.
documentation. There is
Hmm.
no other wealth management firm in the country that opens up or is as transparent. Everyone has a shortlisted list of funds. But
Hmm.
why those funds have been shortlisted, what was the thinking? If I've sat and evaluated one flexi-cap fund and given it a 5-star rating, another fund a
Hmm.
3-star rating, another fund a 1-star rating, we have looked at 5 specific criteria when we've looked at these funds.
Right.
Our thinking on each of these criteria for each of these funds is available on our tech platform directly for our end investor to be able to open and see. Now, the reason for that is that as a fund manager, if I'm trying to build a wealth management firm, I obviously can't access or speak to every one of our investors. It just physically is not possible.
Not scalable.
And which is where you can, it's not scalable, it's not kind of thing, right? As if you're trying to build a larger firm.
Right.
But at IME Capital, no matter how big we become, tomorrow we could be a multi-country kind of, we already are. We have investors from all over the world. Now, the investor who's sitting in Bangalore right next to our headquarters, to the kind of investor in Delhi, to the investor in a small town in India, to an investor in Africa or an investor in the US. Every investor is seeing the same identical view on a fund which is driven by our central research kind of team. And this is a central research team which is not sales incentivized, is not client facing, who has been basically taught to basically every fund will have some pros and cons. We are
Hmm.
absolutely transparent about what we like, what we don't like, and we just write it the way we see it.
Hmm.
Now, I think this communication of information where information and insights are being driven from a research perspective
Right.
as compared to with a sales agenda. This is the huge missing piece of the
Hmm.
industry,
Hmm. Hmm.
right? And we are able to achieve that because all communication on why we like a fund. The
Hmm.
investor can see what a central research team who doesn't talk to a client thinks about
Hmm.
that fund.
Hmm.
Right? And I think that is a big kind of real difference. So, a second core differentiator at AMI Capital would be around the level of transparency that we operate in. We
Hmm.
believe investors need to have a complete perspective on the fund, not just on the pros. They need to understand the cons as well. There are certain AIFs, for example, which seem very attractive until you don't understand the fee structure.
Hmm.
On our RMS, we'll talk about the fee structure. If there's a problem with the fee structure, very often there's a problem with something called a catch-up clause.
Okay.
The vast majority of investors may not even understand what the catch-up clause is. But that catch-up clause can take a fee structure of 2.5% and suddenly make it 5%.
Insane.
We will mark this in dark red that, hey, there's a problem here. And this is
Hmm.
the kind of information which should normally get hidden. So that's
Hmm.
really the second kind of core differentiator which actually is there, right? And that's what we're trying to change in the industry. We
Hmm.
believe investors have a right to understand the entire perspective about a fund before they take a decision. And if you allow that communication to be driven by someone with a sales agenda, if you allow a private banker to go tell one investor this is a good fund, but the same private banker is going to tell another investor this is a
Hmm.
bad fund, right?
Hmm.
If you have
Right.
five private bankers, each with their own chosen best funds that they are recommending, none
Right.
of this is the right way for the industry to operate, and this is the reality of what happens in the industry.
Hmm. Hmm.
Right
Hmm. Hmm.
now, that is what we're fundamentally trying to change with this whole kind of RMS, where information is now centralized. Every investor is seeing the same single point of truth, and advice is being driven by people with no sales incentives whatsoever.